Hello everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Thursday, June 13th, 2019. We are now in the final trading hour of the day, and as many of you know, I consider the final trading hour of the day, and more specifically, the prices as close as possible to the end of the day as the most valid prices of the day. And that is why I make the majority of my entry and exit decisions based upon the closing price. I'm primarily an end of day trader because I feel like the prices at the end of the day is the smart money coming in, moving the prices where they should be. I feel like the prices intraday during the day, there's just a lot of noise. So I want to make my entry and exit decisions based upon, in my opinion, what the most valid prices are. All right, let's take a look here and just make sure I have everything up and running correctly. Just give me 1 second. All right. Hey Andy, how you doing, my friend? Thanks for coming by today. I appreciate seeing you as always. So that's good. And Andy said hi, so that must mean we are live. All right. Well, listen, the format for today, as always, is first of all, we're going to run the legal disclaimer. When that's done, we're going to come back. We're going to take a look at all my current positions, when I got in them, why I got in them, how I'm going to manage them going forward. And then when we're done with that, we're going to turn to my watch list and we're going to go down through each stock in my watch list. We're going to take a look at support levels, resistance levels, potential entries, setups, and we're going to see if there's something that we need to enter today that looks like a good potential setup for us to enter. And then at the end of the day, if there's any candidates, we'll decide whether or not we're going to enter them, and then we'll also look back at my current positions and see if I have to exit any of those based upon what the price action is of the day. And then when we're finished with all that, and then when the market closes, if you have any questions at all about what I discussed during the first hour, or if you'd like me to take a look at any particular stock or any formations, I'm more than happy to do that as well. So that is the plan for today. Sound good? All right. So, hey, Mount Doji's here. Hey, buddy, how you doing? Good to see you. All right. Well, let's hang tight for the disclaimer, and I will be back in about 40 seconds. Hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, good. We got that out of the way. So how's everybody doing today? Mount Doji, I think he's been reading his Market Wizards book, and that's good. It's a wealth of information. So I hope that you keep up with that, Mount Doji. Okay, so let's get to my current positions, talk about when I bought them, where I bought them, and why I am, and what I'm going to do with them going forward. Okay, so to start off, I did buy Apple back here on the 7th of June when we had a nice strong close above the 200-day moving average. My initial stop would have been a close back below the 200, keeping my loss small if I was wrong. But then if it went my way, being open-minded with it. And as you can see, it has moved up nicely since then. I do phase out of my positions when they go a certain amount up each day from the previous close. And you can see, I think I hit 3 profit targets the very next day. I think I hit another one the next day. Didn't hit one there. Did hit one today near the high. And that's why I like to phase out, because I generally will always get something near the high, the way I structure this. And if you'd like to watch a video where I explain my phase out process in detail, if you just go to my YouTube site under the playlist, in the playlist I have videos of all my specific lessons based upon what we do during the live stream. So if you get some time, you want a little bit more clarity on that, just go to my YouTube channel, go to the playlist. It's important videos to watch. That's the playlist. And then I have different videos about all the different approaches and methods that I use. So anyway, so I did phase out of some Apple today near the top. This is a discretionary trade, which means that I have the latitude to go in, exit a trade if I don't like what's going on. That's compared to a trend following trade or a longer term trade where I would base my entry and exits off of just one level. But a discretionary trade, as it moves up, I can move up my stop losses and get out of it if I see fit. So currently, it's been a nice trade, but my initial stop loss, my trailing stop loss on this will now be a close below the previous day's low. So today, if we close below yesterday's low, I would exit. Tomorrow, if we close below today's low, that would also be my signal to exit. And that's to the downside. If it keeps moving up, then great. I'll just continue to hit profit targets until I run out of shares to sell. So that's the plan on Apple. Okay, CGC is my stinker today. I considered buying CGC back here on the 10th of June when we had this nice strong close above the 200-day moving average. I would use a close below the 200 as my initial stop, and I would scale out as I move forward. Well, because it came from this V formation here, I was a little hesitant. I don't like buying V formations. I like buying higher low breakouts of the 200-day moving average. So I did wait and give it one more day. The next day it did go up for a little bit. It came down, it tested the 200-day, and it closed right above the 200-day, giving me a really good risk to reward entry here, because if it closed just 1 penny below the 200, I would be out for a very, very small loss. And of course, if it went my way, then I would have a nice opportunity for a nice profit. So I did buy it here 2 days ago. Yesterday it did go below the 200-day, and then it closed just right back above, so it forced me to keep the position. Well, it didn't force me, but that's my plan. So it did hold above the 200, and so moving forward, my plan was, if it keeps moving up, I'm going to phase out. If it closes below the 200-day, I'm going to go ahead and just lock in the loss. So barring some kind of miracle today at the end of the day, if this closes, if Canopy Growth closes below the 200-day, I will be exiting this for a loss. All right, DDM. I did buy DDM back here on the 6th of June when we had a nice strong close above the 200-day. This is a good back-tested methodology of staying long the DDM above the 200-day and getting out of the DDM below the 200-day. So this is not a discretionary trade. This is a trend following trade based upon staying in above the 200, getting out below the 200. So I did buy it here. I have been scaling out ever since. I think I had 2 or 3 scale outs here. I had one here. I had one here. You can see I did hit one profit target again today near the very top of the market's price today. This, like I said, this is a trend following approach. So I will stay in this trade unless 2 things happen. One, we close back under the 200-day, or we continue up and I continue to phase out until we've run out of shares. So I am out of about 70% 30% of my shares at this point. So I only have about 30% of my shares left after today's phase out. So if it continues to go up, I'll continue to phase out until I'm out, or I'll hold this until it closes back below the 200-day. So that's the plan with DDM. 5 below. Just give me 1 second here. Hey, Dr. Jorgensen, Apple getting ready to go up or down, hanging out in the 50. Yep, that's right. That's right. I didn't like today's action so much though. Hi, Frederick, how you doing? Hey, remind me to take a look at your charts later today. I got your email and I did look at the charts, but I want to show everyone. And Dr. Jorgensen says, come on guys, use up your weed and buy more. We need canopy to go up. Yeah, well, that's a big ask today. I don't know if it's going to hang in there today. You never know. You never know, but that's my guess. So this is a trade I did on 5 below. I base this off of the weekly bars. Usually I base my trades off of the daily. But you know, the methodologies I use work on any time frame because they're robust, meaning they'll work on any time frame. But what I like about 5 below, we had this nice move up. Definitely in an uptrend. We took out the previous day's high, did get a little overbought. It came down, which is normal, back into the value zone. The value zone is between the 1 and the -1 ATR. Anywhere in here I consider the value zone. Anywhere above here it's overvalued, anywhere under it's undervalued. But the pattern I want you to understand and kind of sear into your mind is this higher high pattern, move down, but the key here is to see how we then move sideways. So we ran out of sellers down at these levels. We moved up, we moved down, which is normal. Now we've moved sideways. Now the market tests the waters below, and it went down and immediately rejected and came all the way back up. Now this bar closed here. If it would have closed a little higher, it would have been considered a V1. A V1 is where you have 2 bars, day 1, day 2. Day 2 washes out day 1 and then reverses. But in order to be valid, it has to close above the previous bar's close, which it did not. So then we go into V2 mode. And V2 mode has 3 bars involved. Day 1, day 2, day 3. Day 2 washes out day 1. Then day 3 goes above the close of day 1. And so I did buy this intra-week when we went above 2 weeks ago's close. Hope that makes sense. These are my profit targets for the week. We'll see if they hold. But we are in the we're in the money nicely. I believe a couple percent. This is what it looks like on the daily. We bought here at 129.55. Right now we're at 132.14. So going forward, if this week closes below the trigger point, the day one's or the week one's close, if it closes below here, I'll go ahead, just take a very, very small loss. If it continues to move up, I will scale out with my profit target being up here at the previous high, about 147. So this has been a nice profitable trade so far. It's doing what we want, so I'll just leave it alone until we either close back below this line or we start hitting profit targets. So that's the plan with 5 below. The Qs. All right. Like this is another trend following, back tested trend following trade. It is not a discretionary trade. Like I just showed you, 5 was a discretionary trade. So why did I buy this? I bought this back on the 4th of June. I bought it because the previous bar we closed below the 250-day moving average, and then the day that I bought it we closed back above. And that is another quantified, profitable backtesting approach of the QQQs, staying in the Qs when it's above the 250-day, getting out of the Qs when it's below the 250-day. So I did buy here at 174.73. My initial stop would be a close below the 250, or if it moves my way, I will phase out. And you can see it's moved my way nicely up, 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 up. I have phased out about 70% of this trade at this point. I did hit another profit target today right at the top, which takes some more shares off the table at higher prices, which is great. So going forward, because this is a trend following trade, it is not a discretionary trade. So going forward, I will keep this until we either close back below the 250 or I run out of shares to the upside. So that is the plan. But this has been a really nice, profitable trade, and that's my plan. Phase out to the upside, wait for it to close back to the downside, whichever comes first. All right, SPY. So as many of you know, I talk about it every day, and I'm sure you guys get sick of me hearing me talk about it. But in case we have some new viewers today, I want to make sure that they understand what's going on here. So bear with me. So I do buy the SPY every day at the close, and then I sell it first thing in the morning. So you might ask, why would you do that? Well, it's based upon this back test at Bespoke Invest on Twitter. But since 1993, if you would have bought the SPY on the open in the morning and sold it on the close in the afternoon each day, since 1993, you would have actually lost 5.2%. But if you did the opposite and bought on the close and then sold first thing in the morning, you would have returned 568%, meaning that more than all performance in the SPY since 1993 has come in after hours trading. That's the post-market and the pre-market, people bidding up those prices and then selling into those bids up prices in the morning, right at the open. That is why you see the difference. So, the green line here, this is the results of buying in the afternoon, selling in the morning. Very impressive, powerful, back-tested, long-term profitable approach. The red line is buying in the morning, selling in the afternoon. Not so hot. So this was the first study that came out. This is a more recent study that came out. This ended in 2017. This one ended in January of 19. But here, the buying in the morning, selling in the afternoon situation went from a minus 5.2% to a minus 13.9%, and the profits of buying in the afternoon, selling in the morning went from 568 up to 634. And then Stephen Burns did a study, because this was based in January of 2019. Stephen Burns did a more recent study showing that the actual return at this point in this year, at this point of the year, is 712.63%. So that is the reason why I buy the SPY every day at the close and I sell it first thing in the morning. And you can see yesterday I bought this here at 288.17, sold it for 289.30 first thing in the morning, and it got sold into, didn't it? So this was a nice profitable trade. I'm out of the SPY right now, but I will be buying it again at the end of the day. So, the key with this particular setup, folks, is it's a long-term system. It has drawdowns. You cannot take too large of a position size because you might run into a really bad situation, into a time period for a year where it goes down. So, I use a 10% position size of my capital. So if I had $1,000 or $10,000, I would buy $1,000 worth of the SPY every day. And, a 5% position size would be fine as well, but you just don't want to buy too large a position. You're going to have ups and downs, so you have to position size correctly so that even if you go, into a long negative period, it doesn't make a big financial, doesn't have a big financial effect on your positions. All right, what else do we have? All right, MasterCard. I have only taken 2 short trades on my channel in my live stream. The first one was on Visa, which was a nice profitable short trade. And we took another short trade back here on the 10th of June. And why did we do that? Well, intraday, we went above the 70 RSI. and then we closed under the 70 RSI. We went above the third ATR channel and we closed below the third ATR channel. These were two indications that there were no more buyers at this level. And if you run out of buyers, the most likely direction is down. If you run out of sellers, the most likely direction is up. So I did short it here, 266.96, based upon the over 70, under 70, over the third ATR channel, under the third ATR channel. And as you can see, we're having a nice day today. I did take 2 profit targets the very next day. We had a slight rally the next day, and I have taken another profit target off today here at 261.30. So 20, 40, 60. I'm out of 60%. I've hit 3 profit targets, so I'm out of 60% of this trade at the moment. My initial profit target, or my initial level that I'm looking at, is the 50 RSI. If we close below the 50 RSI, I will continue to hold it. But if we test the 50 and then close back above it, that will be my exit, my signal to exit all the remaining short shares that I have. But this has been a really nice trade. It's nice to have a little diversity in your positions, not all longs, you know what I mean? So, this helps out today. Still having actually a nice profitable day today, which is pretty impressive, based upon that the market's really sold off here. But that has a lot to do with having the short position, getting out of the SPY at the very high, or close to the high. So those are the trades. Just a real quick recap. If we close today under the previous day's low of Apple, so we better just go ahead and mark that. That will be my signal to lock in my profits and be out of the trade. So close under 193.40. I will exit Apple. Apple's gone negative now. CGC under the 200. We're out of there. DDM. This is not a discretionary trade, but a trend following trade, so nothing to do there. 5, we're basing this upon the weekly. As we move up, I'll phase out. If we close the week below 2 weeks ago's close, I will also get out of that. Qs is also a trend following trade, so there's really nothing to do there. SPY, I will be buying that at the end of the day, and MasterCard is going nicely in our direction. So, all right, let me take a look. Dr. Jorgensen says, SPY is perfect for the lazy trader, 2 trades a day. Hey, I'm telling you what, if I was in a position where, I didn't have charts and I couldn't do a lot of things, there's no doubt that would be my approach to trading. No doubt whatsoever. I mean, you've seen the back test. It doesn't mean it's going to happen in the future, obviously, but I know the understanding of people getting excited, bidding things up in the aftermarket, pre-market, and then selling into the morning. So I agree, Bruce. I agree. If I had to pick one particular system that freed up a ton of my time, that is what I would use. Steve Burns says, amen. Yep. Hey, buddy. Good to see you, Steve. Hey, thanks for sending that over. I'm really interested in looking at that. Steve sent me a kind of a pre-copy of a book from an author that he knows, and so I'm excited to get into that. So MasterCard is down again. Unusual to go down that many days in a row. Good trade. Thank you. Yep, thank you. Well, yeah, it did work out, but the chances of that working out were probably 50-50, but it depends on how you manage it. The key part is that if you were wrong, you get out quickly, and if you're right, then you manage your profit and let that thing grow. Mount Doji says, "Hey, Steve, Cora does great quant work." Oh yeah, Cora is the pre-book manuscript that you sent me. So hey, I'm excited to check that out. All right. Hey, speaking of Steve, Steve had this on his Twitter channel, and in case you do not subscribe to Steve on Twitter, do yourself a favor and do so. It's just like the best Twitter site. He puts out such good information, helpful information, great articles. It's at S. Joseph Burns. So do yourself a favor. It's going to be well worth it to subscribe to his channel and devour everything that he posts. But what I wanted to go over was a post that Steve had where he says, I guess it's from At the Chartist, but technical analysis is not about prediction, right? It's correct. It's not predicting anything. It's not a predictor of one way or the other. Indeed, technical analysis has about, like I said before, about a 50-50 outcome. What technical analysis does offer, however, is a concrete structure around which to enter positions, control risk, and manage trades. And that is the key. You know, you have to have a plan in order to get into a trade. You have to know where you're getting in, where you're getting out. You have to have landmarks on the chart of, you know, how you're going to manage this trade. And that's what technical analysis offers. You know, I'm getting out under the 200-day moving average, or I'm selling it when it goes up to the 10-day moving average, or the 70 RSI, or whatever. So, you know, I talk about having a plan every day, and that's, I mean, this sums it up so well. Technical analysis is a concrete structure around which to enter positions, control risk, and manage trades. Or in other words, offers a concrete structure to trade your plan, right? So you have to have landmarks, you have to know what you're doing, and it has to be based upon something, and that's what technical analysis does. You know, I know some people just trade from the hip, shoot from the hip. I don't know how they do it. I mean, when you're winning, it's never enough, right? So where are you going to get out to the upside? If you're losing, you're always going to hope it comes back. So there's no levels underneath it they care about. They just think it's going to come back. I don't understand how they do it. And, you know, I think 82 to 88% of people that attempt to trade lose money. Well, listen, it doesn't surprise me at all. People that make money in the market, the 12% that are taking all the other 88% money, they have a plan. I guarantee you they have a plan, and they're taking the money from the people that do not have the plan. So anyway, I thought that was helpful. So thanks, Steve, for posting that. Hope you don't mind that I used it. Yeah, reactive technical analysis is the only way to go. Yeah, it is, because it gives you a structure, it gives you a plan. All right. Let's take a look now and see if we've got something going on for today. All right, so Apple. So I'm already in this trade. We've tested 1, 2, 3 times above the 30 ATR channel. That's not exactly positive, but on my moving average crossover trades, the trend trades, I do want to point out today that a long-term moving average crossover signal for Apple looks like it's going to trigger today, and that's the 10-day EMA crossing over the 50-day EMA. You see how we're at 189.02, 188.86. So currently right now it is above. If it closes above, that's a legitimate long-term crossover system, and I will let me show you the back test on this. This is from etfreplay.com. I am using this by permission. So this is the 1050 EMA cross. So the key here is when the 10 closes above the 50 EMA, you buy it, you hold it until it closes back under the 50-day EMA. So you can see this is a great back-tested system. It made 5,618.9% using this system alone with a 50% drawdown. Buy and hold during the same period only returned only returned 4,910.9%, but had an 81.8% drawdown. So you can see this approach beats it both on the return and much less of a drawdown. So this is a good long-term approach. I mean, you do get little drawdowns here, but then you get some monsters. Here's a 219, a 76, a 27. That pays for a lot of 2 and 3 and 4% losses. So this is a good back-tested approach. I mean, there is no doubt. However, for me, you know, I am a little bit discretionary when it comes to when I take these back-tested approaches. And I don't think I'm going to buy this today, and I'll tell you why. One, I already have a small position in Apple. Two, I just don't like the fact that it's happening at the third ATR channel. You know, about 88 to 92% of price action does stall at the third ATR channel. Doesn't mean it can't go higher later, but temporarily. So I'm not going to take this mechanical crossover today just because my filter's kind of telling me I don't like it up here at the third ATR channel. So what I'm hoping for is I do want to get in this crossover, but I'm waiting for a better entry on the crossover than buying it up here. If it just keeps going, well, that's too bad. I'm going to miss it, but you know, I already have some shares discretionarily. So if we can get back down here, maybe near the 200, somewhere in this area, I will re-enter it. I will use the 10 crossing under the 20 as my stop, but I'm just trying to get a better entry on this because we're at the third ATR channel. So I hope that makes sense. This is kind of a concept I've never talked about before. So if you have questions about this after the market closes, please let me know. Steve says the people losing money, they are the 90% that trade with no edge. Yeah, I mean, you have to have an edge. Otherwise, it's just a coin flip, right? Okay, so that's Apple. Oh boy, I've been rambling on. So let's, I guess I better get cruising here. Amazon. I did buy Amazon here when we closed above the 200-day. Had 2 days. These 2 days took me completely out of my position. So that was a nice profitable trade. Kind of moving sideways here now. So not interested in Amazon at the moment. Boeing, you know, we made this lower low. We've come up, we've moved down. We've had a couple days down. If today's bar triggered and went above 2 days ago close, that would give us a nice V2 higher low, but I don't think that's going to happen, but we'll mark it. Alibaba. Alibaba did test the 200-day, now close back below. I'm waiting to buy Alibaba if we close back above the 200. And another added benefit is if we close back above the 200 now, we will be closing back above the 200 from a higher low, which I like much better than lower lows, because the lower lows, people that bought it here, when it gets up here, a lot of times are looking to lock in profits. That moves it back down, but if it's strong enough to move back up, now all the people that sold here are gone. You have a whole group of sellers gone, and that makes it easier for price to move up in the future. So nothing on Alibaba. Caterpillar, really nothing going on there today. CGC, like I said, I did buy that here when it came back down, tested, got close to the 200. Looks like this one's going to be a loss today. I did take only a half a position on this, and the reason I took it was because we came from a V bottom. We came from a lower low. We did not have a higher low in place before we broke above. So I'm grateful that it was only a half position. If it closed back above the 200 nicely, then I would take a full position because we would have a higher low situation going on into the trade. Cisco had a nice move up, move back down, nothing there. Delta had a monster day. Look at this. Break above the 200, it moved up a little bit, it moved sideways at a higher range and cranked on up there today. So if any of you had Delta, congratulations, but nothing there for me. DDM, I am already in, so nothing on DDM. Close back below the 200-day would be my initial stop, or as I keep phasing up to the outside until I run out of shares. The Dow had a nice move up, sideways moving now, but nothing there right now. Disney, look at this. I did buy Disney here back on the 3rd of June when we had this nice V2 formation. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes back above day 1, closes back up into the channel, and you can see it just went rocketing up. I scaled out all the way, got out about here, immediately moved back down. I was waiting for it to come back down into this moving average, but I was looking for some kind of V1, V2 entry to get me back in after the dip, targeting the previous high. But the market had other ideas. I think they got upgraded today and had a big monster day up here. You know, it did break out, but I would not buy it here. It's too high for me. Etsy had that nice move up after the break off of the 100. Didn't have that trade, but it's moved up nicely, although we do have a bit of a kangaroo tail going on here. All right, so this is a little bit of an interesting one. You know, I talk about fractals developed by Bill Williams, where, you know, you have a high with 2 lower highs to the left, 2 lower highs to the right. There's a lot of science behind fractals using 5 bars. Just basically, there's a certain ratio that happens in nature, in rivers and all sorts of things. And when it was overlaid onto the markets, what he found was the same ratio to the decimal point applied in the markets. So his theory is that the market is a natural phenomenon, not so much a man-made phenomenon. So it's kind of deep, but given that if you break over a fractal, you're breaking over a range. You know, every fractal is a range, not every range is a fractal. But I do like that we broke back above the 50-day moving average, upward sloping 50-day moving average. I do like that we have gone above the previous fractal. We are above a 50 RSI, and the fractal comes within the ATR channel. So here's the thing. We're above all the moving averages. I do like this. I don't like bars that are big. I feel like I'm chasing a little, but I feel like long term, this looks pretty good. In the next day or two, it may come back and backfill and so forth. So what I'm going to do today is I'm going to take a half position on Ford. If it comes back and if it closes within halfway of today's bar, not in the low part, but if it closed above halfway but gives me a little better entry, I would add my second half. So I'd have my full position. You know, it's not like I'm trying to average down. Well, I guess in a way I am, but not for the reason. I'm going to buy half the position here in case it just continues to move. At least I'll have half. But if it can come back down and get a little bit better fill than where we are today, all in all, it will give me a little better risk to reward ratio. So that being said, because of the fractal, because where the fractal happens, because we are over the moving averages and close to MACD crossing in a 50 RSI, so I will buy 1/2 position of Ford today. Facebook up a little today. 5 below we have based upon the weekly, so it's moving up nicely. That's good. Gold. This was another trade that I took here. Remember we were just talking about fractals? Well, here's the same thing with Ford. Here's a fractal. It's within the ATR channels. But in this case, we had a multitude of entry triggers. We had the fractal. We had the 520 EMA cross. For me, it's important that it happens within the channel. We have a positive MACD crossover. We were above 50 RSI, and that trade just took off for us. I phased out all the way to there. I ran out of shares. Again, with gold, I was waiting for this to come back to some kind of dip to rebuy, but this was too high for a rebuy for me here. So great trade on gold. If any of you have it, I'm glad for you and hope it keeps motoring up. Google. Google, we are making a higher low pattern here. We are technically making a V2. What I don't like about it is the day one of the Trinity here. You see how one ATR is this wide, this wide? This bar was larger than one ATR. So I don't like to take V1s, V2s when I have the first bar larger than one ATR, because it shows, to me, it shows that there was a lot of distribution, a lot of selling, a lot of supply coming into the market. So I am not going to do anything with Google. Goldman Sachs, nothing going on there. IBB having a good day. I did actually take this V2 right here. And then it went up, tested the 50, closed below the 50, so I did get out. And then it did continue to move back down, continuing to move up. If I want to get interested in IBB, I have to wait for the 530 EMA cross. That's a good back-tested approach. Okay, Intel. I did buy Intel here back on the 29th of May because the previous day we went below 30. We went under the 30 RSI channel. The next day we closed above the 30 RSI, we closed above the 30 ATR channel, and that was my entry point. And you can see it was a great trade, phased out all the way up to here. Yesterday I got out of the trade. This was not a trend following trade or a back tested approach. This was a discretionary trade, and we closed below the previous day's low. So really nice trade, phased out all the way, locked in. So I'm out of the position now. All right, so the other potential on the docket today is the Russell. We did have a high with two lower highs to the left, two lower highs to the right, which again is a fractal. Pretty close to being within the ATR channel. What I liked about this trade earlier in the day was that we came from a higher low and it looked like we were above the 200-day moving average. So that would be, a decent back tested method, not super great. And let me show you the signals on IWM based upon being in it above the 200-day moving average and staying out of it under the 200-day moving average. So you can see it does backtest well. It's not even close to buy and hold, but the drawdown is much lower, but it's not super great backtested. The 1050 SMA crossover is a much better backtested system, but I do want to take a look at this and see how it pans out. But it is profitable. But what I like from here, throwing in my own little filters, is that we do have a higher low, and if it would have closed above the 200-day, it would have also and closed back above that fractal, that would have also been positive. So right now it is under. So we'll just have to see. If it closes under the 200-day, 100% I'm not taking it. If it closes above the 200-day but not above the fractal, and the fractal is 153.14, I will probably also not take it, but we'll keep it on the watch list and see. Coca-Cola, nothing there. We did buy Lockheed Martin back here on the 29th of May. We had this nice V1, and we rode it all the way up to here, scaled out all the way. I ran out of shares about here, and as you can see, that was a good place to run out of shares. MasterCard is our short, so that's doing fine. I'm not going to mess with that unless we reject the 50 to the downside or we close above the previous day's high. That would be my exit, the way I'm going to manage MasterCard going forward. Merck, having a big down day today. Microsoft, nothing really going on there. Netflix, I may be interested in Netflix if we can go back down, test this prior low. Do you see how deep these MACD bars are on this first low? Then we make a rally, then we come back down, but now we're not quite down there. But even if we did get down there, these MACD bars are not going to be as deep. They're going to be more shallow than the previous bars. And that's what's called a double bottom with a bullish divergence. I learned that from studying with Dr. Alexander Elder. In his opinion, it's the most powerful technical indicator, although it is a counter trend kind of indicator, but still I use it a lot, and it's worked out nicely. But this is one of those trades that, if it comes back down, tests that bottom, does have a double bottom with a positive bullish or with a bullish divergent, and then closes back above the 200. See how all those indicators are starting to line up? So nothing there on Netflix today, but I will continue to watch it. Philip Morris. I did get in Philip Morris here when we went under 30, over 30. No, excuse me. It was here. Yeah, because we went under 30, back over 30, under the third ATR channel, over the 30R channel. It immediately went down against me, stayed above the 30, so I kept it, moved back up. I didn't like what it was doing. When you enter a trade, if it should move your way. The best trades move your way pretty soon after entering, and so it's just been moving sideways, not doing anything. So I just decided to go ahead and exit the entire position, just because it wasn't moving my way. Didn't hit any of my stops or anything like that. It just wasn't reacting well, and it's legitimate if something's not reacting well to get out of it. PayPal, nothing there. QLD, that's the double leverage Qs, nothing there. Qs, the regular Qs, we already went over that. We bought that here, been phasing out. We still have it. Silver having a big strong day today. So nothing for me on silver. SPY, we already talked about that. Buy on the close, sell on the open. I will be buying this again at the close. Square, hey, speaking of double bottoms and divergences, again, this is a great example. You have a double bottom, or you have a bottom, you have a move up, you make a lower low. The readings on the MACD, even though you're lower, are much less deep than the previous. So that gives you a double bottom with the divergence. Doesn't tell you to immediately jump in the trade, but it's painting the big picture that this looks like it has a potential big picture setup. Then you need an entry to get into the trade. And what was my entry? Well, my entry, several entries. We had a V2 situation, day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. That was 1. We also had a false breakout to the downside. This was the false breakout portion. We closed back up into the range, and intraday we were very close to 30 as well, and then we closed back up into the channel. So those were my entry signals, and as you can see, just took off our way. I ran out of shares right here or here now, I can't remember, but I phased all the way out till I was out of shares. So that was a wonderful trade. It was over 14% total trade. So nothing on Square today. AT&T, nothing going on there. Bonds, nothing happening there. Tesla, this was a good example of under 30, under the third ATR channel. Next day closed back over 30, closed back over the third ATR channel. I didn't take it because it got stuck right here at the 10-day. Was a great trade anyway. So UNG, nothing really there. USO, I am going to buy a 1/2 position today on USO, and based upon what we just talked about, we've talked about being under 30, back over 30, being under the third ATR channel, back over the third ATR channel. Well, yesterday we were under 30, under the third ATR channel. Today, as long as this close, today it went back over 30, went back over the third ATR channel. I'm a little hesitant because we are lower than the open, even though the close here is higher than previous day's close, but I'm okay with it. If it closes under the 30, I'm out. It gives me a small stop loss, and my initial target up here would be about the 50 RSI. So the risk to reward ratio was here, and it does check off the 2 check marks that I need of under 30, over 30, under the third ATR channel, over 30 ATR channel. But that's a half position because it's under the 200. Okay, the dollar, no. Visa, no. VIX. Well, I did get out of the VIX yesterday, and today it is coming back, and it is triggering a V1 entry again and back into the channel. So, based upon that, I am going to take a 1/4 position, and the reason I'm taking a quarter instead of a half is because the VIX moves so much more than the regular market. Buying a quarter is like buying half. So as long as this triggers this V1, I will hold it. Verizon, nothing there. Energy, nothing there. Financials, nothing there. Real estate, having problem with this level right here, nothing there. And healthcare, I would have bought healthcare here above the 200, would have been a nice trade, but I missed it at the end of the day. It looked to me like it was closing under, then it closes over. Sometimes that happens. Do the best you can, but sometimes you're going to miss those, and sometimes the missing is going to work out, and sometimes it's not going to work out. Okay, so nothing on Boeing. Yeah. IWM looks like it's going to close under. USO, I am fine. That looks good. All right. So potentially, what do we have here? I'm going to take a 1/2 position on Ford based upon the reasons I told you. Apple, I may have to get out. IWM does not look like it's going to close, at least not at the moment. 1/2 position on oil. Let me just run those numbers real quick. All right. All right, let's just check our current positions before we enter any more. Apple, as long as it closes above there, I'm going to hold it. CGC, I'm going to get out of the position. DDM, we're fine. 5, we're also fine. Qs, we're also fine. SPY, going to buy that end of the day. And MasterCard is going our way nicely. So, well, again, we have a lot of work to do here with a small amount of time. All right. All right. I'm just going to go ahead now. I'm going to enter the oil position because that one looks solid as far as being legit by the end of the day.
Order filled.
Okay.
Order filled.
1087 on USO. All right, so oil's out of there. Apple's looking okay. IWM is not there. Ford, I'm going to go ahead and I am going to buy my 1/2 position in Ford. but only a half position because I feel like it could backfill and we could get a little better price, but just in case it does continue to move up, I want to have
Order partially filled.
something because
Order filled.
there are definitely some indicators going for Ford, especially the fractals.
Order partially filled.
1003.
Order filled.
All right. Is Apple still holding? It's getting close. IWM's getting close as well. Oh, I got to get my SPY. What am I thinking about? All right, so let's go ahead and buy the overnight SPY position. I almost forgot to do that.
Order partially filled. Order filled. Order partially filled.
All right, getting out of
Order filled.
CGC. 289.13 on the SPY. All right, there's the overnight SPY entry. Ooh, that's going to be close on the IWM. 152.92, it's not quite there. And the VIX has untriggered at the moment. It was above the previous days. I do like the V1. I do like back in, but it has to close above 27.78, and that's exactly where I have it. Well, now the Russell's above as well, but just because it's closing above, I really would want this to close above 153.13 because then it would close above the fractal amount. Apple's still looking fine. Ford, we're up a little bit already. 153.14, it'd have to close above. And the VIX, see how it's fallen off now? It's not confirming that V1, so if that's the case, we'll not re-enter the trade. So we have 2 minutes. I will get that queued up just in case we do close above. It's a quarter position. I know we went over a lot today, so if you have questions when I'm done, please let me know. All right, we're down to 1 minute. Apple's still hanging above yesterday's close. 27.78, so VIX would have to rally here. And it's not rallying, so looks like we will not buy it. Got 10 seconds. It sold off. So it got some people, it sucked them in there. All right, now the market's closed. Well, oh nice. It did end up a nice positive today. I'm so glad. Took care of yesterday's little loss we had and a little bit more. So we have not done too bad, everybody. We've been profitable 8 out of the last 9 days. So we've had a good little run. So hey, listen, if you have any questions, let me know. Just type them into the chat, and I'm happy to answer them. But before I get to the answer portion, I just want to put in a quick plug for myself and let you know that I do offer private one-on-one teaching and coaching sessions in the evening time via Skype. So if that's of interest to you, send me an email. My email's in the description of this video. My hourly rates are there. But if you feel like some one-on-one time with me at nighttime would help you in your trading journey, please reach out to me. Let's talk. It usually just starts with the free phone call, just to get to know each other a little bit better, so you can give me some background on your trading experience, what issues you're having, what you'd like to achieve in the future, and I will sit down with you over Skype, and I will put together a plan using good trading principles, and also based upon what your financial situation is, the time you have available during the day, and we'll come up with something. But I've had great results with my students. I love to teach, and don't let them go until they really know what they're doing. So if that's of interest, just reach out to me, email, or you can send me a message on Twitter. And then also, if you like today's broadcast, if you find this channel helpful, if it's helping you with your trading, please hit the thumbs up button. It does help with the rankings for Google, helps me grow the channel. So if you could hit thumbs up button, I'd really appreciate it. And if you could tell people about the channel, maybe share it on social media, because there's a lot of people out there that need help with trading. Obviously 88% of people lose money trading, so I think there's a big pool of people out there that could use some good advice. So anyway, all right, that's enough of that, and let's go to any questions. Let's see Ford MACD crossing also. Yep, so we're in Ford. Hey, we're already in the money. That's great. Hey, Rocky, how you doing? AVGO. So, all right. So, Rocky, I never buy in front of earnings. You never quite know what earnings are going to do. Sometimes you get great earnings, but the stock goes down. Sometimes you get horrible earnings, but the stock goes up. I really consider it gambling. We can take a look and see what it is doing after hours. AVGO stock. Hey, they're up $1.88 in the after hour session, which that's great. But like I said, I don't really trade off of earnings. Tomorrow, if it does gap up, an approach that you could use is you could go ahead and use the low of the gap up day as your initial stop. Let me give you an example, like on MasterCard. MasterCard has had this huge monster. Was it MasterCard? I think it was MasterCard. Oh yeah, here. Well, see how it gapped up after earnings? So if I thought this was just going to continue up, I would place my stop at the low of the gap up day. If it closed below that, I would just go out. If it continues to move up, then I could play it that way. But it's better to play the gap up after earnings than it is to buy in front of earnings. So I hope that makes sense. Let me pull up a couple charts here from Frederick. He had a couple questions, so I'm going to move these over here. And then this chart over here, we'll move that over there. So Frederick from France, we were talking, he asked me about this chart. Do you see how we had this nice strong break back above the 20-day moving average, came from a higher low, which I like. I don't like the V bottoms. I like the lows where we go up, they'll make a higher low, then take off. So, this could have been your entry point right here at about $80, and that thing moved up nicely. It looks like it is still over the 70 RSI. So if I were in this trade, there was no reason to get out of this trade. The only potential reason is if it was above 70 at some point today and then closed under 70, but it looks like it closed over 70. So if I were in this trade, if I would have bought it, intraday here or here at the close, I would be have my finger on the trigger to get out of this pretty soon if it closed back under the 70 RSI. If it keeps going up, then you can just keep it. So good trade set up there, Frederick. And then on this particular one, what I do like about this is, we've moved down, we moved up, we now made a higher low, and then today's bar took out the fractal, similar to Ford, right? Here's the high with two lower highs to the left, two lower highs to the right, and we move above the fractal while at the same time having this higher low underneath us, also closing back above the moving averages, and strong. I believe this is MACD. These aren't my charts, but is this MACD? I think it is. Had a strong reading there. RSI is only 44.30. It would be better if it was over a 50 RSI. I do understand that, but I do like the higher low. I like the fractal. I like the cup. I like the saucer pattern here where you just kind of go down and then a big strong up. Hey, look, he put his little V1s in here too. Good job, Frederick. So yeah, I mean, if I were to have bought this here, the first question always is, where do I get out if I'm wrong? I would get out under the 20-day moving average, or close under the 20-day moving average. That would be my signal to get out. So anyway, I hope that helps, Frederick. Steve says, lately we need more hands at the close with all these photo finishes. Man, I'll tell you what, I could use 6 pairs of hands. Steve, I manage several accounts. So at the end of the day here, not only do I have to look at 2, 3, 4 stocks, but then I have to be able to try to do it in 2 and 3 accounts. And sometimes it's just humanly impossible. And if you find yourself in that position, the solution that I have is you've got to get out of some of the positions earlier, with 5 minutes to go or 10 minutes to go, and then hold the ones that are really on the bubble till the very end. But yes, I mean, man, it's been difficult. Like you say, photo finishes, very difficult. Miguel Sanchez. Hey, Miguel, how you doing? Thanks for coming by. I think Miguel's a first-time visitor. Good evening. Thank you for your work. Well, thank you, Miguel. I appreciate that. I hope it's helpful to you, and I hope you keep coming back. Frederick, from which city are you? Greg, I am curious. I live in Ogden, Utah. It's about an hour north of Salt Lake City. Rocky says, bought 50 shares. Long-term keeper for me. So you bought AVGO. You bought 50 shares during the day or after hours? I hope it was during the day because it's up and after hours. It's up 1.88 in after hours also. So let's see where that would put it. Kind of in this area. Well, I can tell you one thing, now that we made a higher low and back over the 200, back over the 100 and back over the 50 RSI with the MACD being positive, not bad. I mean, technically, based upon where it is right now, I mean, who knows where it's going to close tomorrow, but based upon where it is right now, I think that looks fairly healthy. Average cost, 280, 23. That's good because right now it is 283.50. Nice. Nice. Way to go. Way to go, Rocky. It's volume average. Oh, I see. Okay. Sorry, I just wasn't familiar with that chart. Steve says, I've been using laptop, iPhone app, and iPad app sometimes. Yeah, I know. I think Steve has the redundancy of like 3 devices just in case one device doesn't work, which is a good idea. Especially on your internet too. At the very least, you have a hotspot from your phone in case your regular internet goes down. And, anyone who's traded for any length of time has run into this. I've never met anyone that hasn't. Frederick, RSI 43 a problem for the V1. Well, like I said, uh, I would like it better if it was over 50, but sometimes you don't get exactly what you like. But I still, based upon the indicators that you have on this chart, I look, you could do a lot worse. I do like the higher low. I do like the fractal. I do like the small bars moving, consolidating, winding up like a spring, and then today's move, boom, closing back above the moving average, and then also above the fractal, coming from a higher low situation. Yeah, I don't think it's bad. I mean, of course, we don't know what it's going to do, but if you let it run 2 or 3 times the right here, this 950, that might be a decent profit target right there. But the main thing always is to look for the downside. Just be right on top of it. Be very impatient if this thing closes back below that 20 EMA, and just get out. Just think of it as one of 1,000 trades. Just get out of it. Be done with it. Forget about it. Move on. But if it starts moving up, keep an open mind. But yes, if it was over the 50, I would like it a little bit better. But the setup it has right now, I like. I wouldn't have a problem taking that trade if it were me. Rocky bought it during the day. Okay. Greg, thank you for your analysis about my stock. What would be your selling point on Air France? Oh, this is Air France. To the upside would be if we tested the 70 RSI intraday and then closed back below it, or if we closed above the 70 and closed back below it, or I'm not sure what this moving average is here. Maybe that's the 200. That's probably the 200. Or if we rejected a major moving average to the upside. So if we rejected this, if we rejected the 70 RSI, close back below, I'd get out. If we rejected this 200-day, close back below, I'd get out. If we closed above the 200-day, I would keep it. And then if it closed back below, I would get out. So that is how I would manage this trade going forward. But the main thing is, if it closes below that 20-day, that's the main thing to watch. That's the 200. Okay, good. Ooh, what a day, huh? It's kind of all over the place. So we did get rid of CGC today. That was our only stinker. We have Apple. That held. We have Ford. We bought that over that fractal. IWM, I did not buy that. Steve bought that because it closed over the 200. So I hope that one goes way up for you, Steve. VIX was going to get in that if we closed above yesterday's close, but we did not. So I am not in VIX. So 5 moved up nicely for us. DDM, we hit the profit target. Qs closed nicely for us. SPY. Oh, there we go. Yeah, we're already in the money on SPY. So that is it. Invisible Hand, yo. What about porn stocks? I did not even know such things existed. Invisible Hand. I did not know that. All right. So, does anyone else have any other questions at all today? All right. Well, I am going to get up in the mountains. It's a beautiful day here in Utah, and I'm going to go hike. And Frederick says, thanks, I understand. Well, if you go to your place, I will invite you at the restaurant for your time. Very good show. Oh, good. I'm glad. But yeah, if I ever come to France, Frederick, definitely going to look you up. Maybe we can go have a little something. All right. Well, thanks for coming, everybody. I hope you learned something today. Oh, and by the way, I always like to leave you off with, do something nice for somebody today. Give them a smile, give them a wave, hold the door open, just a little something. You might make their day, might make a positive, might have a positive effect on their day, and they may go ahead and pay it forward, and just helps along. So, oh, Johnny, have a good one. Thanks, buddy. Appreciate you coming by. Invisible Hand says, I own a couple of mom and pop shops down the street. A couple shares of a mom and pop shop down the street. All right, good. Adios to you too, Rocky. All right, everybody, I appreciate you coming by. If you have any other questions in the future, you can email them to me, or you can send me a message on Twitter. All right, well, that's it. Another day under our belt. And hopefully see everybody tomorrow. And then on the way out here, got to play the U.S. government required disclaimer. So thanks again. Take care, everybody. See you tomorrow in the last hour of the market. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance, result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.